But then let's go into, because I know that there are some people who obviously think that, hey, I know I got to have insurance, but they have no idea the importance that, or the important role, I should say, that credit plays, within insurance. Let's talk about that.
Absolutely. So, for everybody who's watching this, understand that credit is the foundation of almost every financial instrument, because basically what credit is your trustworthiness. It's your trustworthy score. That's what we say in insurance. Even with us guys, I'm not a credit expert. I don't proclaim to be, but I tell people that if you want these companies who've been around for 100 to 200 years to guarantee you something, they want to make sure that you can guarantee them something as well. And so, to get life insurance by itself, there's ways and there's avenues that we can help you get life insurance without having to get a credit check. But the best companies that are offering the best interest and the most benefits, they want to run your credit because they want to see who you are as a person. Because for all these companies, it doesn't help them for you to get a policy and then 6 months down the road, a year down the road, you cancel it, because they've done all this administrative work. There's a lot of expenses, a lot of fees that goes into just making sure that you're the right person and all this stuff. So the first year, 2 years, 5 years into it, they're taking a loss just by giving you the policy. And for someone who, has a bad credit history, they're thinking, why would I offer them 5-6% interest guaranteed if there's a good chance that they're looking like they're going to default on this in the next year, next 6 months? Why would I be giving this to them? Or what's the likelihood of them paying a premium? What's the likelihood of them taking care of themselves and making sure that from a health perspective, they're not doing something crazy? And so I know credit, you may be saying, man, I made one bad decision and that doesn't determine who I am as a person, which I agree with that. But a lot of times with these financial institutions, if you don't know anything about insurance companies, they do not like losing money. So when there's a recession, when there's a depression, when things are going down, these companies do not go out of business because they hate losing. And so if you have adverse credit, unfortunately, that looks like it may be a loss for them. And if it's a loss, they're going to not take the risk, because insurance is all about risk. They're just trying to figure out how probable is this person to stay alive, healthy, and do what they're supposed to do, pay the bills. And if right now your credit score is said otherwise, as weird as it sounds, because people think life insurance is like a charity, like everybody should get it. And that would be nice. You would think it's so. That would be nice in a perfect world, but these companies have to make money. Because if they're going to guarantee you $100,000 death benefit or $1 million death benefit, you want to make sure that they got the money to pay it. And the only way that they can guarantee that they are going to have the money to pay it is if they take good risk and don't take losses. It's going to happen at some point, but they're in the business of not taking losses. And your credit score is basically going to give them a rating. It's going to give them an idea of whether it'll be a win or a loss for them, or a winning relationship or losing relationship for both of us. Because if you don't win in it, they don't win. If you lose, we lose. So that's how your credit can affect whether you can get approved, and if you get approved at the rating, because it could be tax, it could be more, just like auto insurance or something like that.
Wow. And see, guys, I hope you guys are taking notes on this, because Chris is telling you stuff that this is the type of stuff that's not in the commercial, right? When you're watching, you're looking for insurance and things of that sort, and people, I think they don't understand not only the importance that credit plays into this, but they say, you know what? Well, I need insurance, so whatever my score is whatever my score is. But they don't treat it like when they're about to buy a house. They say, okay, let me get my credit in order. When they're about to get a car, let me get my credit in order. No one says, hey, I'm about to get insurance, let me get my credit in order, because now you're paying these higher rates, or you may not get approved at all because you're too high of a risk. So that most definitely helps as well too.